you might be able to retest 49,000 on the chart. We've been stalling out right here. That's a bullish pattern. It can potentially break out underneath this upsloping trend line. Bitcoin has a chance here. Remember resistance, then it became support, 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 support. You have a window here on Bitcoin. We broke below it and it continues to be resistance. Then be careful because it could really start to dump out.
In this video, Gareth Soloway, a well-known technical analyst and crypto expert, will delve into the charts of Bitcoin, gold, and the Nasdaq 100. He'll explore how these charts are influenced by economic and monetary factors, addressing common challenges faced by traders. Topics include Bitcoin's resistance at $44,000 and its potential next move, the relationship between gold and the US dollar, and the significance of the head and shoulder pattern on the weekly chart. Gareth will also discuss Jerome Powell's rate cut guidance and its impact on market expectations, using tools like the Fat Watch. Additionally, he'll analyze how earnings from companies like Caterpillar and McDonald's reflect the economy, examine job trends, assess the yield curve movement for recession risk, and explore issues within the Nasdaq 100's market leadership and breadth. Join Gareth for an insightful conversation covering these topics and more. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
You know your Bitcoin chart. This is the chart I've shown you pretty much every day for the last, 2 weeks or so. Notice again where we've been stalling out. We've been stalling out right here underneath this upsloping trend line. Remember resistance, then it became support, 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 support. We broke below it and it continues to be resistance. Now, what I will say is Bitcoin has a chance here. It has a chance to break through this level. The reason I say that is because if you look at this, and let's zoom in on this chart here, all right? So if we look at this pattern formation right here, what do we have? And let me grace these lines here. We have an up move with sideways consolidation. What kind of pattern is that? We know our patterns, right? Up move, sideways consolidation, right angle, approximate right angle. That's a bullish pattern. It can potentially break out. Now, as of now, it's still stuck at resistance, right? So if it can't get through, then the fastest move is usually the failed move, right? So if, in other words, you have a window here on Bitcoin to break through probably within the next 24 hours. If this can't break through this 44,000-ish level, close above and confirm, then be careful because it could really start to dump out. But right now, this has a shot here to make a little bit of a move up, back above 40,000, 44,000. If it does, you might be able to retest 49,000 on the chart.
Gareth Soloway recently discussed the Bitcoin chart, which he's been closely monitoring for the past 2 weeks. He highlighted a significant resistance level around $44,000, coinciding with an upward sloping trend line that previously provided support. According to Gareth, Bitcoin displays a bullish pattern characterized by upward movement followed by sideways consolidation, suggesting a potential breakthrough of the resistance level within the next 24 hours. However, he cautioned that failure to do so could result in a sharp drop. Gareth also mentioned that if Bitcoin manages to break out, it could retest $49,000. It's worth noting that in January 2024, the SEC approved the first physical Bitcoin ETF after years of rejections and delays. These ETFs track the spot price of Bitcoin, unlike previous ones based on Bitcoin futures contracts. The first 10 physical Bitcoin ETFs were launched on January 11, 2024, attracting billions of dollars in inflows. However, despite this development, Bitcoin's price has remained volatile and range-bound between $40,000 and $50,000 over the past 2 months. Some analysts attribute this to uncertainty and competition from the Bitcoin ETF, along with regulatory and environmental pressures on the cryptocurrency industry. Others view it as a consolidation phase preceding a new market reality.
Gold, again, just continues to do its thing. It's got the inverse relationship with the US dollar. Again, what we could see here is gold continues. It almost got back to the high level right here, just shy of that a couple days ago. Then the jobs report came out, the dollar spiked, and that really is hard for gold to fight. When the dollar's going up as dramatically as it did Friday and today, very hard for it to hold back. Now, having said that, we still have a trend line right through here, which we're right onto, right? So we have that level right there, you have this area right here, and then you have this area right here. So there's a lot of supports here. I continue to think that the bigger pattern is the dominant pattern. If you look at the bigger time frame, for instance, if we go to a weekly chart, the weekly chart, very, very important to just continue to remember this pattern. So whatever this does over here, and again, this is the weekly, so you see how insignificant the price action is. This is the pattern that I'm focusing on. Shoulder, right? Shoulder, head, shoulder. And again, hasn't broken out yet. Has to break the neckline and confirm. But that's the bigger dominant pattern. So again, you get this choppiness in here. The only thing that would concern me is if we start coming down to the low of this shoulder again around 1850, 1800. You start doing that, then that pattern could fail. But as long as you're trading in this range, and gosh, we're still above 2,000, this pattern is the most dominant pattern. Therefore, my job is to go with that pattern.
During his discussion, Gareth touched upon the gold chart, emphasizing its inverse correlation with the US dollar. He noted that while gold has been performing well, it faces challenges from the strength of the dollar, particularly following the recent jobs report. Gareth highlighted the numerous support levels for gold and emphasized his focus on the overarching pattern of head and shoulder formation on the weekly chart, which he views as bullish unless gold breaches the low of the right shoulder around $1,850 or $1,800. The January 2024 non-farm payroll employment report revealed a significant increase of 353,000 jobs, surpassing expectations and prompting an upward revision of the previous month's figures. This bolstered the dollar and exerted downward pressure on gold, signaling a robust and expanding economy while also heightening expectations of inflation and interest rate hikes. Despite facing challenges from the pandemic, rising bond yields, and competition from Bitcoin over the past year, the price of gold has remained resilient and stable. Some investors view gold as a safe haven and an inflation hedge, while others opt for riskier and more innovative assets. Additionally, gold's value is influenced by supply and demand dynamics, as well as geopolitical and social factors.
So number one, last night Jerome Powell was on 60 Minutes, and he basically said 3 rate cuts is kind of what the Fed is guiding towards. That's what they're thinking is their maximum amount of rate cuts this year. Remember, the markets were pricing in 6. It's now down to 5. We'll take a look at that Fed watch tool in just a minute. Now, again, the key here was the first rate cut to be expected in the second half of 2024. So, again, we'll take a look at some key things on the Fed here. But, again, Jerome Powell very strongly guiding the market towards 3 rate cuts and starting in the second half. I looked at the Fed watch tool just a little while ago. The market is still pricing in May as the first cut. However, we are seeing some adjustments later on. We'll cover that. Next up, Caterpillar beats on earnings. They missed slightly on revenue, just by a hair on revenue. The stock is moving slightly higher today on the back of the earnings beat. All right, let's keep it going. This is where things get even more interesting. All right, so the yield curve. We know about the yield curve, how it's been inverted. Interestingly enough, just a couple weeks ago, it was looking like the yield curve was going to uninvert. Now, again, historically, what we do know is that when it uninverts, that's usually when the market begins to fall, right? It's interesting, but that's really what ends up happening. The inversion portion is usually the preemptive portion before the stock market starts to fall and the economy spins into a recession. Interestingly enough, because of the strong jobs data and the other economic factors out there, we are seeing the inversion start to increase again. So it was just about to uninvert. Now it's starting to widen its path again, which again shows us that that economy in the short term is strong and the uninversion persists. Next up, government jobs continue to surge while private sector layoffs mount. So if you looked at the data on Friday for government jobs, you saw that, again, another spike higher in government hiring. We obviously know the debt that is going on in this country here in the U.S., really globally, let's be fair. But again, the government continues to hire. We continue to see almost daily announcements from private sector jobs, publicly traded companies, of continued layoffs. Now, again, the layoffs are not amounting to anything significant to push the non-farm payrolls into negative territory, overcompensating for the government jobs, but it is something that I think we have to watch as a trend going forward. Next up, on Friday, if you took Meta, Amazon, and NVIDIA out of the NASDAQ 100, the index would have been down. Think about that. The NASDAQ was up, 200 plus points on Friday. If you just took out 1, 2, 3 stocks from the NASDAQ 100, the amount of points they contributed, the market actually, the NASDAQ 100 would have been down. Now, the reason why this is important, it tells us something about market breadth. It tells us that there are a few stocks that continue to lead this market very sharply to the upside, while a lot of the other stocks are stalling out. In fact, if you look at the breadth, right? 52-week highs were 52-week lows. If you look how many stocks are trading above their 50 moving averages, believe it or not, it's not very many at this point, a very select.
For more daily dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.